Hi, this is Lara at Elliott Wave Stock Market with a free Dow analysis for you for the New York trading session dated Tuesday the 8th of February. And I'm recording this video, well, it's Wednesday the 9th. Now in New York it's after midnight. After New York's closed for Tuesday the 8th, I'm going to go over my historic wave count. This is on a logarithmic monthly chart going back to the early 70s. I've chosen to start my wave count here simply with the end of a 5-wave impulse label here at cycle degree. For this long rise, I'm not worrying about the subdivisions within this. I'm just starting my wave count here, saying that this was the end of a 5-wave impulse, which certainly fits with what we know with prices being lower earlier, with a few big corrections along the way. Thereafter, we have an A, B, and we're expecting a C to the downside at cycle degree for a supercycle expanded flat correction, which is a very common type of correction. It has an A wave that has to subdivide to a 3, B always should subdivide to a 3 unless it's a triangle, and B for an expanded flat correction must reach at least 105% the length of A, and that certainly is met here. Wave C should usually end substantially beyond the end of A. I don't think it was over here, as the duration of this downwards movement is too swift, and I would expect wave C to reach 2.618 the length of A, because this B wave is a very long length in relation to A. It's a 154% correction of A, which is just a little bit more than the usual guidelines, which is 100 to 138% length of A. So it's a little bit longer. So usually C would be 1.618, but in this case it's more likely to be 2.618 the length of A, which would see the Dow fall down to 2,278.84 points. Taking you to a monthly chart in more detail, just looking at this piece of movement here, this is where the 5 is down here. And this is an ABC structure for an A wave, an ABC zigzag up for a B wave, and now we're looking for a 1, 2, and 3, 4, 5 on downwards for a C wave. 2 can't move beyond the start of 1. So this wave count expects that we should not see any movement to a new all-time high for the Dow. And this 2 is so far unfolding as a nice zigzag, and we're looking for the end of this C wave now. However, I have an alternate where instead of having the 5 in this point, I have it further up at the all-time high for the Dow, and the reason why I have this alternate is when I look at this piece of movement on a monthly chart, to me it looks a little bit more like it should have a corrective count with an A, B, and then C as a 1, 2, 3, 4, 5. I like the subdivisions with this labelling better. So if that's correct, I expect a correction to correct all of this long multi-decade rise would be extremely unlikely to have been over in just over a year. So it's probably just wave A of the correction, even though I have it labelled here as a 3. Technically speaking, it could just be over there, but it would have a horrible look. So for that reason, I expect this is a wave A of a flat correction, and the most common type of a flat is an expanded flat, which requires a B to move beyond the start of A. So this alternate wave count actually allows for new all-time highs for the Dow before we see that sharp plummet to new historic lows. So both my main and alternate wave count both expect a sharp drop to new all-time lows for the Dow below this point, below 6,470, comfortably below that. It's just the point at which they turn differs between the main and the alternate. This alternate wave count requires wave B to be at least 90% the length of A. That's a requirement for a flat correction. So if price reaches up to 13,425 points, this will then become my main wave count because I prefer the subdivisions of it. It still has this as a zigzag. It does have a difference here though. This is seen as a 1, 2, 3, 4, 5 wave structure instead of an ABC zigzag. I think this piece of movement here is a little ambiguous and possibly could be seen either way. I actually prefer this piece of movement with my main wave count labelling to this alternate. But as I said, for this piece of movement I prefer this labelling to my main wave count. So it depends on how we interpret this piece and this piece of movement as to which of these wave counts is correct. If we reach up to this point, then this is going to become my main wave count. At this stage, we will simply work with this wave count, and we're expecting that we're in a C wave at intermediate degree to the upside to end a zigzag for a primary wave 2, which cannot move beyond the start of 1. The C wave is subdividing as a simple impulse. We've had an end to 1, 2, and taking you now to the daily chart. This is the 3, 4, and we're looking at the end of the fifth wave within it. So this is the invalidation point, and I have a new target zone. Price has moved above my previous calculated target zone. I have used this target zone before, we'll use it again now. At 12,479, wave 5 blue will reach equality with wave 3 blue. At 12,519, wave C black will reach 0.618, the length of wave A black. So I expect price to continue on rising to get probably pretty close to this little 40-point target zone. It's also pretty likely we're going to see a little overshoot of this wide blue parallel channel that contains wave C blue impulse to the upside. This is Elliott's technique, it works very well, so we should use it. Draw first a trend line from 1 to 3 and place a parallel copy on 2. It's really common for fifth waves to have an overshoot. It doesn't have to be indicated by a fourth wave overshoot on the opposite direction. It's just pretty common that fifth waves overshoot these trend channels. Most importantly, when we eventually see price movement below this big wide blue parallel channel, we will have confirmation that we have had a trend change at intermediate and therefore at primary degree. We should be expecting the Dow to move pretty strongly downwards to make all-time lows below that 6,400 previous low at the end of the credit crunch. Taking you now to an hourly chart where this pink 4 will be just off to the left of the chart, and we're going to have a look at this last piece of upwards movement. My main hourly wave count expected further upwards movement, and that's what we've got. So we have that pink 4 off to the left of the chart. We're now looking at a terminal fifth wave within a terminal fifth wave within a terminal C wave. So we are getting a lot closer to the end of all this upwards movement, but we're not there yet. Within wave 5 pink, we have a 1 and 2 off to the left of the chart. Here's the end of 3 and 4. And within this fifth wave, we certainly look like we're having an extension. This is an impulse here for 1, a sharp zigzag for 2. And within this third wave up here, we have an extension with the 1, 2, and an extended 3 in here. 1, 2, 3, 4, 5. 3 is over here. Now looking at this last little piece of movement as I do this analysis on a 15-minute chart, I don't think wave 4 purple is over here. The structure is incomplete. It's probably an A, B, and working on a long C wave, or it could just be a 1, 2, and working on the third wave down of wave A of a zigzag for this fourth wave. It's fairly likely that this fourth wave at purple degree may come to end around about the fourth wave of 1 lesser degree, so a target at this early stage for this little correction about 12,144. But wave 4 may not move into wave 1 price territory. We should not see price fall below 11,981. Importantly, wave 4 can touch the end of wave 1, so price can move to this point, but it cannot move below this point. When this correction, this fourth wave is over, we should see a trend change back to the upside for the Dow and more upwards movement. The wave count to this point for this wave 5 green is incomplete. We need one more upwards wave to satisfy a simple impulsive count. And this is our same invalidation point on the daily chart. There's a nice ratio within wave 3 purple here. Wave 3 aqua is 6 points short of 1.618, the length of wave 1 aqua, but for wave 5 aqua there's no Fibonacci ratio to waves 3 and 1, which is pretty common. Just very quickly going back to the daily chart here for you. On the daily chart, there's no Fibonacci ratio between wave 3 blue and wave 1 blue, so when we see no ratio within the first two of the 3 actionary waves of an impulse, it's even more likely that we're going to see some type of relationship within the last. So in this instance, it's pretty likely that this fifth wave at blue or minor degree is going to reach some type of relationship to either 3 or 1. It's past equality with 1. The next target is where it will reach equality with 3 at 12,479. So that's a fairly high probability target to the upside for the Dow. The wave structure is incomplete and it needs further upwards to go. If my wave count is invalidated, I'll be looking for trend channels, initially that small pink one on the daily chart, and then after that the big wide blue one on the daily chart to be breached before I have confirmation of a high being in place and a trend change for the Dow. That trend change is coming up, but it's not here yet. That's all for me today with your Dow analysis. I hope this helps you in your trading, and if you would like analysis on a daily basis of the S&P 500, you will find it on my site.